Hey guys, Ken Calcutt here with Cornerstone Financial Management. Hope you're doing well. We're getting ready to kick off Memorial Day weekend here. I wanted to give you a quick update on what's going on with the markets. Two things I want to cover today. The normal chart that we cover here, the S&P 500, and then I want to look at some of the things that are driving this. But let's start with the S&P just so you know what's going on with the market. As you can tell, this year has been pretty bumpy. We had the drop here in March. That was with the war starting and oil prices spiking. Late March was the bottom, and here we are today, late May. So the last 2 months, we've had a pretty sharp rally in the stock market. We've run into all-time highs for the last couple of weeks, and the momentum seems to be pretty good. But a lot of reasons that the market is doing this. We're cautiously optimistic that it could go higher, but I certainly wouldn't be surprised if we see it come lower temporarily. So I'm going to pivot, talk about a couple of the reasons that we're seeing this and what might be happening going forward. Okay, so what I've got on the screen here is just an overview of what I think is going on. The S&P 500, what I was just showing you on the previous screen, we're roughly 7,450 right now. That's about where it's at. We touched 7,500 last week, but we're about 7,450. That's very close to all-time highs. What's causing that, and where I think some of the concern comes in, at least for me, there is some concern. So these three dynamics have a large impact on where the stock market is, okay? This is corporate earnings. So this is primarily, I think, what drives the stock market long term. How much profit are companies making? That dictates what their stock price should be, which dictates where the stock market goes. Corporate earnings are very important. We are in the middle of earnings season right now. We've gotten a lot of the earnings for year-to-date performance and projections for this year. For the most part, it's really good. We're getting good earnings reports. We're getting good forecasts for the most part. This factor that influences the S&P, I would say this is very positive. Corporate earnings look really strong. These two are the concern for me. Okay, I saw a report the other day, a gentleman named Dan Niles. He's a portfolio manager. He puts a lot of content out. He put out a report I thought was very helpful. I want to give him credit for pointing this out. When you look at the dynamics of oil prices, the 10-year Treasury yield, and the stock market, we've got a weird dynamic right now. Oil prices are north of $100 a barrel still, give or take. We need oil prices down in the 80s maybe. 80 or below. That's a healthier level for the stock market to be able to sustain that. 100 and above is problematic. 10-year yield, this is the interest rate on a 10-year government bond. These rates have crept up over the last couple of months because oil prices are higher. These two are probably going to move similar to one another. When one's up, the other one's up. One's down, the other one's down. 10-year yields have crept up to about 4.6. That's fairly high. That's the upper edge of what the stock market, in my opinion, what the stock market can handle without causing the stock market to pull back. If this keeps trending higher or doesn't start coming lower and oil prices stay lower, it doesn't make sense for both of these to be high and the stock market to be high. Normally, if these two are high, this one's low. If this is going to stay high, these two need to come down. And so we're in a weird mix right now where all three of them are high, and that's, in my opinion, that's not sustainable. So we really need to see oil prices start to come down, which should cause 10-year yields to start drifting lower. If this gets below 4.5, which is where it's been for the last year and a half, very manageable. If we stay above 4.5 and start pushing 5, I would suspect we see the stock market start coming down. So this dynamic of these three is really what we're watching to say, where's this going from here? I think the key ingredient is oil. Oil is going to dictate yields. Both of those are going to dictate the stock market. So what's happening with oil is potentially problematic if we can't get oil below $100 over the next couple of months. So that's what I think is going on. We've got a very good looking stock market right now, but some of the underlying currents could be problematic if they don't start improving soon. So we'll have to watch it and see. I would say don't watch the news too much, because one day a piece of news will cause oil prices to drop to 85, and then a week later they're back to 105. I don't think it's reliable information. I think all of the stuff in the Middle East needs to get resolved. The Strait of Hormuz needs to get reopened. The demand for oil is not going to change, so the supply needs to get back to where it can match the demand. So, and nothing we can do about it. We just wait and see. This is what's going on. We're watching it. I don't think we need to change things up right now, but I wanted you guys to know kind of what we're watching and how things are moving. So as always, if you guys have questions for us, reach out anytime. Thanks.